All right, let's talk about your money, because when it comes to this shutdown, both sides, they are still blaming each other. No signs of caving in. Retirees particularly are waiting for the shutdown to end. The shutdown has delayed the release of inflation data, and that data is what determines next year's Social Security cost of living adjustment, or COLA as it's called. So financial advisor Ernie Burns from Burns Financial is here right now to explain how all of this goes. We just had a piece of news this morning, Ernie, saying that they actually called back the people that do those numbers to finish this report. What do you think of that?
They need to know the Labor Department. They need to know what the CPI is to make these adjustments, and the market needs to know. So the foundation of the country needs to know that. So that's why they can't be furloughed right now. They have to pull them back in.
So what happens when they pull them back in? They release those numbers, then what?
Well, the CPI number comes out to see if it's infected with inflation this year, and pretty much inflation has leveled off around 2.8%.
Okay.
I don't think we're going to say 2% again. That's when I know the Feds are pointing for it, but we've had too many things happen over the last several years. But the market's already conditioned for that. They're fine with 2.8. But once that's basically seen, and also the job market is slowing, it's a win-win looking at the Feds lowering interest rates in November.
All right, so talk about when these numbers do come out. They say this is what Social Security COLA will be. How is the retiree affected right now?
Right now, not at all.
Okay.
Right, not at all. And we looked at the last 50 years of government shutdowns. They do not affect the market. The longest one is 1995. The end of 1995 into 96, it was 35 days, and it has not affected the market in any fashion. Pretty much, if the government stays out of the private enterprise business, the market does really well.
Interesting. Talk about the federal government shutdown when it comes to the federal jobs and the people that have always believed that this is a really good way to live. They have pensions, they have benefits, but now they're the ones saying, are we going to get paid on the 15th?
Yeah, well, they are going to get paid, but here's the thing. I know it's aggravating because you are furloughed right now. And they're threatening each other, both sides are pointing fingers. But it's not a win-win if you're a federal employee right now. You don't know when you're going to go back to work. But in the same instance, they are going, it's just the law, they are going to pay you back any money they might owe you in the past.
And that's one of the biggest parts of the conversation that we've heard now, where it's almost like you don't know if it's actually a tactic or if it's a real plan, saying we're not going to back pay you if this continues. What do you think about that, Ernie?
It's a tactic.
Okay.
It's a tactic. They're going to pay them. And the federal government, no matter what side you're on, they're going to pay them. They need those jobs. They need those people in place to run the country.
Okay. Talk about the market being on this bull run for quite some time now, the whole year. What do you think is going to happen for the rest of the year?
Well, with the job market slowing, therefore it's pushing the Feds to lower rates. In addition to the earnings, the last quarter's coming out soon. Now companies are going to start reporting their earnings. In addition to inflation actually leveling off. And now we know what the tax cuts are going to be extended now. We don't have to worry about tax increases. Companies are going to do really well. Therefore, the country is going to do really well. The market's going to do really well. We're going to look at probably a very strong bull run at the very end of the year to continue what we've had most of this year.
Okay. All right. We'll see what happens, and we'll have you on to talk about it again.
All right.
Thanks. Ernie Burns from Burns Financial. Let's get over to Zach Fradella now to see